Okay, we are live. Good morning, good afternoon, good day, wherever you're watching, whatever time you're watching. Just thank you for joining us today. Welcome to Lyonsview Realty Financial Fridays. My name is Clara Lyons-DeVaughn, and I am the broker owner of Lyonsview Realty. We provide residential, commercial for small businesses and nonprofits, and property management services. We also have Lyonsview Academy, our educational arm that does real estate pre-licensing and continuing education, credit counseling, and distressed homeowner solutions. So, Lyonsview Realty, we launched Financial Fridays to help you stay current on those trends that impact your bottom line. And our goal is really to provide you with the resources, information, and tips to help you stay current and help you to make the best financial decisions. And we really want to help you maximize your wealth building power now and in the future. So I'm glad that you tuned in today. Welcome, welcome, welcome. Feel free to like, share this video. And our guests are here as a resource to you. So feel free, any questions that you might have today, put them down in the comment section so that we can respond back to you. And have a very, very special guest today who is a returning guest, Miss Almitra Tankersly. And that girl, what is it? That girl's,
This gal talks
this
credit.
gal. Talks credit. Yes. Yes. And in the environment that we're in right now, credit is so important as a leveraging tool. It's always good to leverage other people's money instead of your own. And in order to be able to do that, you really need to be able to have your credit situation on. I'm dating myself, on fleek. we used to say back in the day. I don't know. What do they say now?
You're not gonna catch me out there. Out there, that's my
Okay, on
16-year-old
point.
daughter.
Yes, you need your credit situation on point. So we're going to do a couple of things today. One, there are quite a few people who are in the home purchasing market, and they may need a credit tune-up. And Miss Almitra
Nice.
has
I
a
like
very
that.
special.
I'm gonna steal
Yeah,
that,
very.
Clara. Tune that.
Yes, we all need a tune-up because we can all get better, right?
Yeah.
So she's going to share about a program that she's got coming up soon. But before we jump into that, we're going to kind of do a recap on some things that are going on. One, what's going on with the whole market about forbearances at the beginning of the year, as part of the pandemic. We were in this cycle of people who were being impacted by COVID and how that's affecting their credit situation or could potentially impact their credit situation. And then we're going to do a short recap of the three areas to look forward, in your credit, the percentages to kind of review that, and then we'll go into the special program to help you get ready, get your tune up, rev your engine, so you can move forward. Indeed. So, how are you doing today, Miss Almitra?
I am excited. It's September. Happy September. Oh my gosh,
Happy
where did the year
September.
go? This is the last quarter. We got the fourth quarter takeover, man, over here at Credit Fitness. It's
Yeah,
amazing.
fourth quarter takeover. I like that.
Yeah,
Yeah.
yeah.
That
I
last
mean,
one.
we were all celebrating, counting down 10, 9, 8. Happy New Year, 2020, right? And
Yeah.
then everything happened. It was like a nightmare horror story. But for the most part, I'm super excited. I'm super excited because you got to remember that as sports goes, the fourth quarter is what counts, right? It's like, all right,
Yes.
listen, y'all might have been doing good in the beginning, but we gonna come back for you. That's how you got to have an attitude towards this whole COVID-19, the rioting, the civil unrest, all this stuff that's going on. You got to make the fourth quarter count. And so, for those that are watching you right now, I mean, just the fact that they're in tune for Financial Fridays with you, it's amazing to see that they're still trying to just, they're clinging for it. They're like, come on, we got to win. We got to win. So, for everyone that's watching today, the information that we want to share is to really help you win. Okay, so I'm excited, Clara. I know you are.
Yes, yes. It's like getting that end game. We're in the end game. Fourth
It is
quarter
the
is the
end
end
game.
game.
Because
Yeah.
you got to look at it like this: credit is a game, and most people who understand their own knowledge about credit, whether they are a mortgage broker or a corporate banker, a real estate agent, whatever they are doing in the industry, they have their own mindset and understanding based on their experience. But if you
Mhm.
are not fully like submerged in the industry itself of credit, understanding the behaviors of the FICO scores, the different formulas like 2, 4, and 5. 2, 4, and 5 is the most antiquated formula that's used with the FICO system, which the banks will use in underwriting, whether it's for your credit card score, your mortgage score, and your car loan score. So if that is the case, why in the heck will people be super excited about what Credit Karma gives us when it's not the true accurate score for your mortgage score? I mean,
Say
I'm
that.
just saying. I'm just
Say
saying.
that.
And the
Say
same thing
that.
with the credit card score. They use that as the Bible, the holy Bible of their credit score because their credit card said this is their score. And I get it. It's a line of trust. If they're submitting information to you and it's coming from Visa, Amex, or whoever's supplying your score, you're thinking, well, I know my accurate balances. I know my accurate late pays or on time pays. Why wouldn't I believe that the score that they're giving me is the right score? So I get
Right.
that. So what I mean by, being submerged is understanding those behaviors and then being able to determine which score really makes sense, which score is really truly accurate for the actual bank product that you're going after. Does that make sense?
It does, and I think it will back up a minute because there
Mm-hmm.
are most people are familiar with Experian, TransUnion, um, and Equifax. Like,
Yes.
so when you pull your credit score, those are the 3 that come up, but I don't
Mm-hmm.
think what they realize is that there are these other, uh, credit moderators as it were. Like, when you're going to get a mortgage,
Yeah.
they pull a different type of credit score than the ones
Mm-hmm.
that you might see, which reports
Right.
different information. So
Right.
that's what Miss Almitra is talking about is there are different ways that depending on if you're going for a car or if you're going for a
Mhm.
mortgage or if you're just going for a credit card,
Yeah.
where the repositories that are pulling that information about your credit viability,
Right.
in terms of how they determine if they're going to lend you credit. So yeah, I
Yeah.
get it. I get
Yeah.
it.
So let's
Yeah,
go over the boring parts if you want to do that now about the breakdown of the credit score. I call it
yeah, the
boring because
percentages. That's
everyone's
what
like,
I think
oh,
people need to
I heard
know.
this before. Ah, I know this. I know this, right? All right.
No,
So if you
they need
think of
to
it like
know it.
this, the score model FICO system has a formula. Now the formula is sort of ambiguous. I didn't say studied. I study. So ongoing
Mhm.
continued education, like you wonderful real estate agents do. Um,
Okay.
the thing is, studying keeps us, up to par, right? So I
Yeah.
study under some of the most amazing people in the industry. One of my favorites that I talk about all the time is John Alzheimer. He has done so much on CNN and just a lot of stuff online. So, and as well as regular media. But he is the one who really turned me on to the whole understanding the credit profile, understanding the scoring model system, stuff like that, which made me go deeper and, of course, spend tons of money more to go learn something, right? So,
Yes.
if you think of it this way, formulas that are given through FICO are not going to be fully disclosed, unfortunately. Okay. Miss Gooding, who is one of the leading over at FICO, we just studied under her. And even with her, she talks about the different formulas and even the newest formula that's coming out, which is FICO 10T. I mean, they're really creating all these different formulas based on what happens in our society. Okay, so like the foreclosure market, FICO 8 came out. It didn't come out at the same year that FICO had, this issue during the foreclosure pandemic, but it came out. Okay, so the FICO 8 is what usually everyone sees on credit card scores, the even directly to the credit bureaus. When you go to FICO, or I shouldn't say FICO because FICO is its own company, but in regards to Experian, Equifax, TransUnion, if you go there now, you're going to see the Vantage score, FICO 8. Okay, so even that is something that would be ambiguous to someone that's thinking that they're going to the source, getting a score because they make you pay for it, right? But
Yes.
that's not the score that the banking systems will use during underwriting for mortgaging. Okay, so that's
Correct.
the one thing.
Yeah.
So again, the boring pieces is the formula that FICO is using to create the score. There's 5 pieces. If you think of it to be easy, like a phone number, it would be 35, 30, 15, 10, 10. Okay, that's probably the easiest way I remembered it, but those are the breakdowns. Now, that's not to say that each piece of that pie that everybody talks about with FICO pie chart, listen, that doesn't mean that if you do every little thing in that pie chart that it's going to come up with the exact formula. It's basically a general population of all the credit scores and credit reports that are out in cyberspace, which is about 146 million profiles. It's
Mm.
35, 30, 15, 10, 10 of the total number that's calculated out there.
Okay.
Okay, so people more so think, oh, if I just do 30 of this and 35 of it, no, it goes deeper than that. Okay, so just to know what the formula is in regards to creating a pie and how to make your score what it should be, understand that FICO is going to go by 35, 30, 15, 10, 10. All right, so what's 35? I wonder, can you even see any answers with people? I'm curious to know if they even know what those numbers are.
Okay,
35%
I'm
counts
going
for
to ask
what?
for the people who are watching right now, 35,
Yeah.
30, 15, 10, 10. So
Yes.
what percentage of your score do you think goes to what? And we'll give you a little bit of a hint. So some of the categories would be, how long you've had your credit, the consistency of your payments. What else?
I think that's the key thing. When was the
But
last
those are
time
the
y'all
key
was
things.
late?
Okay, okay.
Right?
So if you
When's the
didn't,
last
if you
time?
didn't, if
Payment
you didn't
history.
catch, like, Miss Almitra broke it down on another broadcast that we had. So you got to go back and watch that broadcast for
How about
all the goodies, right? You can
that?
catch that
Yeah.
on YouTube and you can catch that on her Facebook page as well. But we did this breakdown before. This credit fitness is really important, y'all. The tune up, like,
Yeah.
you got to tune
Yeah.
it up and keep it tuned.
Yeah.
Keep it
Yeah,
tuned.
yeah.
So
And even for
35.
those that don't like fitness, because I know some people like, oh, I feel like sometimes if I just watch a fitness channel, I'm sitting on the couch watching, I'm like, woo, that workout is crazy. I'm still sitting on the couch with my chips something.
Uh,
I think
uh,
most of us are most comfortable just watching people work out, but they don't want
right.
to really involve themselves in the workout. Like they'll do it for half a second and they're like, okay, that's for the
Right. Well,
birds.
Mr.
But
Carlton is out there. Mr. Carlton, type in the chat 35, 30, 15, 10, 10. What percentage do you think goes to what? Or what do you
that's
think might be one of the categories that they're evaluating in your credit? Let's see if he's gonna chime in here.
I'm curious to know which Carlton that is. I wonder if that's the Carlton that's on our team. You
Carlton
better not.
Ash.
Yes, you better not embarrass us, Carlton. No.
Don't embarrass Miss Almitra. 35, 30, 15, 10, 10. That should be the answer.
Yes.
35, 30,
Right.
15,
I
10,
should probably
10.
tell my
35,
16-year-old to come up with some kind of jingle. Come on,
Yeah,
maybe make
yeah,
it up, make it
yeah.
up. Help
There you
these people
go.
to
There you
remember.
go. Call it the credit fitness jam.
Wow.
15, 10, 10.
All right.
Okay.
So let's see.
Well,
What's their answer? Because I can't see.
I
What does
can't
he
see
say?
a response from here. He
Oh, that's
hasn't
so
responded
corny.
yet.
Carlton's usually
Yeah.
spot on. So I'm going to help him out.
Okay.
35% is payment history. Okay.
Okay.
I think I'm going to spend more time on the payment history now that we're in. Actually, I'll spend 35 and 30 time on that because right now with the pandemic going on, a lot of people are now seeing a difference in their profiles because either one, they went into this whole pandemic era right around what was that, March, and some
Yeah.
people were like out of work. Okay, so we get
Yeah.
that. So then there came the CARES Act. The CARES Act said, okay, let's make some adjustments to help people manage what they have going on with their debt loads today. So whether it was with your
Right.
mortgaging, whether it was your credit cards or car loans, whatever you have in regards to your financial
Right.
responsibility. So the payment history was what people were concerned about because they're like, I never paid late on anything. I just, I don't know what to do. So some of the creditors, not all, some of the creditors were able to extend like a courtesy deferment. on a lot of accounts. Okay. Mortgaging is that industry that probably allowed their clients to do a 2 to 3 month deferment on their payments. I don't know what the payback was. Depends on what that contingency was, whether you had to have all the lump sum in the next month that's active, or
Mm-hmm.
you could put the information, or not the information, but the money that you were behind at the end of the loan. Okay. So it
Mm-hmm.
really
For some
depends on
lenders,
what, right.
yeah.
So it depends on what some of those contingencies were. So you have to
Right.
know exactly what that was. Then you had credit card payments that were missed, and therefore those deferments were applied as well. So the payment history is 35%. So if you have a late that has occurred, which I am seeing an influx of calls coming in now because people are saying, wait, I was in a deferment. Why did they do a 30-day late? I'm confused. What is happening? And so for a 30-day late to show up, especially on a credit profile that has never had late ever, you could see 100 or more points removed from a pretty perfect score of an 800 or 700, which will definitely put you into the 5 and the 600 club. Super easy, right?
Mm,
The other part
right.
is 30% of the amount you owed. So the other side to the deferments and the payment history is the amount that you owe. So if you were out of work,
Mhm.
furloughed, laid off, shoot, some of y'all didn't even have a job before COVID started, but you had credit lines that were available to you, and you
Right.
said, well, I'm going to use my credit lines, right, to
Mhm.
survive. And so now your debt load is more than what you would normally
Mhm.
spend, and more than what FICO says is good to stay in a sweet spot, or the safe zone of keeping the credit
Right.
scores at a doable number. So anytime you go over 30%, according to the FICO chart, that's when you can see a point loss. And when I say a point loss, I'm talking about like $5 can help you lose 60, 40 points. Five
Are you
dollars over the
serious?
30%. So if you think about $1,000 limit, and you know 30% will put you at $300. Well, if
Mhm.
they add their interest at the end of the statement
Mhm.
closing date, that's going to take you over, which could be the
Mhm.
$5 or whatever the case is. And so
Right.
now they get to stamp mark you over that 30% threshold. You lose the 40 to 60 points, and now your wonderful 700 or 800 fell. Okay, so that's
Mhm.
how super easy that is. And then, of course, the other parts are the length of history, which is 15%. Now, let me say something about length of history, because I know some of y'all feel like, well, I'm old as Moses. That is not the case when it comes to credit. You could be old as Moses, and let's say, and I don't know if I feel like age really matters today, because we got so much technology and so much
Mhm.
health things that we can do to make us live longer. In fact, people are living longer. But in regards
Mhm.
to the saying we're old as Moses, the fact is you could be 60 years old, or
Mhm.
more seasoned than that, and you
Yeah.
decide, I'm going to do a refi, or I'm going to travel the world, so I'm going to take a second mortgage out on the house and use those dollars to do that. That's if COVID lets up, right? You do the refi, now you've shaved down the length of history of your credit
Mhm.
report. So instead of
Okay.
you thinking you're old as Moses, you might turn out to be a little bit in the middle, where you're old as Jennifer Lopez. I'm sorry. Why did I say Jennifer Lopez? I think she looks good for her age, so I'm just saying. But you're going to be shaved down on history. So instead of you having
Mhm.
40 years of history, they can kind of take the average, and it'll be less than 40 years, which could be somewhere in between that 20 to 30-year mark. Okay, so you lose a lot of points as well as history when you begin to apply for new things like a car. Maybe you're not going to travel the world. Maybe you just want to upgrade the vehicle. Maybe you want to help a student in your family go to college. Like, those
Mhm.
are the things that I need people to understand, that history can be, it can be detrimental too if you're not careful. Okay. And then the
So we're
last parts, go
oh,
ahead.
let me ask you a question right quick. So if you you're saying if you apply for new credit, it
Hmm.
averages your history. So if you have
Yeah.
older history, new history, it's kind of the average. We'll use average loosely, but it's an
Yeah.
average of that time. Okay, got it.
Yes. Yes.
Hmm.
So if I can just kind of like give you a better understanding on what averages look like, I'm actually pulling up something now. So credit cards. Credit cards, you can have a 14-year-old card, you can have a 6-year-old card, and then a 2-year-old card. So in
Hmm.
your mind, you're thinking, okay, my oldest account is 14 years old. The problem is they take the average of that, which will bring you down to like 6.5 years.
Gotcha.
Okay. So that's why
Got
you have to be super careful about the things that you're applying for. And that's where it makes sense to have a professional to have that understanding of the FICO score behavior. So you're not just haphazardly doing things like, hey, I'm going to do a refi. Let me run my credit like one million times trying to find the best interest rate. Like that's it's cool because they give you a certain window. We'll
to
teach you
do
what
that.
those safe windows are in the class settings
Mhm.
that we have. But you gotta know what the rules are, or you're just going to wind up losing in the end. The other side is, making sure you understand not closing accounts. I have people that are like, Almitra, I know not to close an account, but this store went out of business. What do I do? Okay. So, and that's kind of builds the reason why I tell people stop getting into so many store cards, because especially now, like if anybody has a Sears card or a JC Penney's card, like take heed. You got to plan for disaster, because JC Penney's or Sears might do a switcheroo on you and shut down. Look at Neiman Marcus filing the BK. I mean, it is
Yeah.
what it is. But if you took a store card, that store card is going to show up on your history. And if you've had it for more than 2 years, yeah, it could be super detrimental to your building process. So again, we talk about this in more detail in the class setting. You can understand why I talk about fitness, because it's about being ready to push the button when you need a car, when you need a refi, when you need the roof done. Oop, I didn't even think about this repair. But you have lines of credit to be able to help you live your life, because that's what credit is about. Okay. And then the last parts, which is 10 and 10, is your new credit and your credit mix. So I already talked about getting new credit, so that's going to be 10%. But then you have the credit mix. Some people just have all student loans. That's
Mm.
it. Then some people have all credit cards and they're all store cards and not really major cards. Then you have some people that just have installment loans, which usually incorporates just the mortgage, just the car payment, maybe a student loan or two, maybe this teeny tiny little card under $1,000 as a limit, right? So those are different mixes, but if you don't know exactly what mix to have, then that could be detrimental too, where you're like, I don't understand. This credit stuff is for the birds, right? So again, if you have some kind of concept of where you are, it just makes sense to like know how to make it stronger. So that way, if you decide to run, you don't pull a muscle, you don't pull a tendon, or if you got angry knees, like sometimes I do, man, I don't even be running, Clara. I mean, where I live is very hilly, and I'll be like, okay, I'm gonna do this. It's a good day, man. I'll be feeling good. About half an hour in, coming back home, I sat down. I'm like, oh, my knee hurt. But that's me conditioning, right?
Yeah,
And then knowing
consistency.
where the pain
Yeah.
points are, so I can work on that. But if you guys are just haphazardly, not really doing too much with your credit, maybe you haven't done anything in the last 6 to 18 months, and then you like, oh, let me get out here and get something. You're gonna pull something. Something's gonna go out of whack, and more than likely your credit scores are going to suffer. So those are the pie charts. I think the most important part of that pie is something that most people say, don't go over 30%. Don't go over. Okay, listen real quick. I am taught ongoing by one of my favorite mentors, and based on the lessons that we've learned, it ain't 30%, y'all, and it ain't zero. So if you want to know, I will definitely fill you in. We actually see it because these are the exact percentages that these credit cards have to be at to be able to get green lights for more credit
Mm.
and extensions or increases on credit limits. Because if you are outside of these percentages, you ain't getting nothing. All right. And I said just like that, because some of y'all just like, man, I got an 800. I could do this. Okay. I'm going to show you some things in the class where we have 800s and 700s that get declined. That might sound
Mm.
crazy, but you can
Wow.
get declined. Okay. So, but in regards to mortgaging, it's
Mm.
pretty straightforward over here. We know exactly what items need to be on that credit profile to strengthen. We know exactly how to make sure your clients, if you are, working with a lot of individuals who are like, hey, I want to be a first-time home buyer. They can't even qualify for some of the grants because the scores are too low. I think most of the time the average score needs to be about a 680 if we're going to be fair. 680 is
Yeah.
what the banks are like,
Yeah. 680 is the
we're good to
COVID
go.
score. Yeah, the
Yeah,
680 is the COVID score. Yeah, it was
exactly.
640. So tells you how times are a changing.
Yes. Yeah. Well, you got to think about
Mhm.
it. The risk factor is higher the lower the
Mhm.
scores.
Higher
And in
end.
most
Yeah.
cases, if you see a pandemic, if you see all these different things, you have to think about who owns those mortgages. Okay. It's usually private money that owns the mortgage. Because, like, even though the servicer of the loans are Wells Fargo, PNC, all the majors, 2 weeks later, they done sold that package to some private
Somebody
organization.
else.
Okay, so if you are, let's say you're a billionaire, which you will be eventually, a billionaire is going to say, what's my bottom line? If there's a pandemic and you're sending me a package of 100 files where there's only maybe 20 with A1 credit and the 80% is all risky, ain't nobody gonna be trying to put themselves out there like that, especially if everybody's laid off. Like, it just doesn't make sense. And that's why a lot of people in your industry have to, like, dig a little deeper to understand how you can help your clients and how you can be the superhero for them, so that way when they do get in a home, they get to stay in a home. And even if they
Yeah.
go in with the scores that are not like pristine, they can get in the building and then put them into a program that keeps them elevated and even strengthening their situations where they're going to buy some new appliances. They're going to go to Bob's Furniture. Bob's Furniture need to give me a plug. I really like that store, especially for a first time
Sure.
home buyer. I really like that store. But of course, you got the higher end stores, whatever the level, they're going to buy furniture. They're going to buy a Wolf, a Sub Zero. They're going to do some things after you put them through the door, but help them to stay there, help them to enjoy their home further by allowing them to get into a program, not so much rehab, but more so just a strength training situation. So they know how to keep in good standing with payments on time with their mortgage.
Mhm.
Second, enjoying the home by putting the little bells and whistles of all the things that will make their home a home. And if they know they got to get a car, because most people buy their cars before they go to the settlement date,
No,
that's
we're doing
another
a
topic for another
campaign.
day.
Our campaign right now with NARAB, National Association of Real Estate Brokers, is house, then the car. House
Yes,
first, then the car, because the car doesn't
yes,
appreciate, the house does.
yes,
And the
yes.
appreciation
And
of the house will help you get the car later. So
yes,
house,
and not
then
only
the car.
that, you got to
Yes.
remember it like this: getting a mortgage is like getting married. You're getting into a really major situation, and so if you
Long
think about, and
term.
I'm not for all the open marriages that are open today. If that's what they do, that's your business. But in regards to marriage and what I know it to be, if you found out that your soon-to-be spouse the night before just cheated on you, are you going to really be happy to be at that altar? Or would you, if you really could not, like, if embarrassment wasn't the key, if you could really have the boldness to say, I don't, at the altar, without everybody saying, what, we done came out to celebrate, you ain't, like, seriously, if that was not the issue and you really could say, I don't, and you found out that this person cheated, more than likely you're not going to do it because they cheated
Right.
the night before. So the same thing with the bank. If you said you're going to get into a mortgage, that's a major event. If they find out that you went and purchased a $60,000, $40,000 vehicle, whatever the vehicle is, the day before, and you decide you want to drive up the settlement in your shiny new, they're gonna be like, nah, we're gonna have a dry settlement today because that new debt load just made itself. Okay, so
Right.
that's
That's
why the credit is pulled this day. The title company will pull a credit report that day
right.
to see, did you cheat? I bet you somebody like that, really, she went there with the cheating thing. Yeah,
Yeah,
I did.
let's pause on that because people don't know that. They, like you said, they're going along in their transaction or getting
Hmm.
to settlement. Right before settlement, they check everything, like
Yes.
days before. Are you still employed? What is your
Yes,
credit score? What
especially
other
today.
obligations have you
Hmm.
done prior to settlement? And it's
Yes,
cheating. It's
yes.
cheating, and I don't think people see it. Um, One, they don't know that it's going to happen, so they're
Hmm.
oblivious to it because they think, oh, all
Yeah,
this goes together. No, it doesn't all go
yeah.
together. You need to keep your situation consistent, and consistency is probably number one, just be consistent in what you're
Yeah,
doing, consistent
yeah,
in your payments, consistent in
yeah.
being on time. I tell my folks after they get into the house, put that mortgage payment on automatic payment. Set it up so that it just pays like clockwork. You don't even have to think about it. It just
Yeah,
goes, comes
yeah.
out of the account and goes. So yes, you make a very valid point. Don't do things prior to the consummation that are gonna
Mhm.
affect you getting kicked out or getting
Yeah,
kicked to the curb at the altar, as you say.
yeah, yeah. I mean, and if we could just pause on that cause of paying on time. Usually, if you think about the whole process of purchasing a home, they usually ask for bank statements. They want to see what have you had in savings, like what's your habits. And usually people don't understand that by just saying, "Oh, I got like 2,000." No, you really need to show the bank that you have at least 6 months of payments contingent on the dollar amount of what your monthly payments are supposed to be. That's how
Mhm.
you impress underwriting. Okay. So if you know that your note or your mortgage payment is going to be 1250 a month, and that includes hopefully a PMI, maybe if you're doing first time home buying with 3 point whatever it's going to be percent down, you got to show them it's 1250 times 6 payments in there. That's called
Mhm.
your daily average balance. That's why they ask for bank statements. They don't really care if you went to Popeyes last night. They don't care about that. You can eat all the
Right.
Popeyes you want. Can you eat the Popeyes and still have their payment for 6 months?
Mhm.
So now you show you got 6 months of payments and you got your down payment. Oh man, that's a no-brainer for them. But if you show them, I got 2,000, and they like, well, 2,000 is just a teeny percentage of what 6 payments would need to be. So
Right.
let's not just get so caught up in just telling clients, hey, just have a down payment. Let's show them to really make the banks feel good about giving you a sweet deal. Show them your
Mhm.
average daily bank account in your savings, not checking, savings. Okay, because you got to remember,
Mhm.
checking you can take anything can happen. Savings,
Right.
most accounts, it has to be a transfer into checking, right? So if you're
Right.
showing the average daily balance of whatever the dollar amount of a house you're trying to afford, however much house you're trying to buy, you've got to show them that daily average balance at least for 6 months. That makes sense?
Yes, yes, yes. So I wanna transition because these have been the 35, 30, 15, 10, 10,
Mm-hmm.
35, 30, 15, 10, 10. So your payment history on time, the percentage that you owe in credit of the total amount that's available to you,
Mm-hmm.
the length of that history, the mix of that credit,
Mm-hmm.
and then the new credit that you're bringing on board. So those
Yeah.
are kind of the different categories. And so you have specifically a credit fitness or a credit tune up for this fourth quarter for people going into it. So I want you to talk a little bit about that and what are the results of people going through that program and then what they're going to get. So yeah.
Awesome. Yeah.
Mhm.
So we have this wonderful Credit Fitness America campaign that is now being launched. It's a great time. It's Labor Day weekend. How about that? And
Yeah.
we want to celebrate our country. We are the country. Okay. It doesn't matter what country, what other country you came from. If you're in America, you're residing here, you are the
Mhm.
country. You are the makeup of this land. And so we want to celebrate those individuals who do business here, who purchase buildings and properties and create all kinds of situations for families who are going to be a first time home buyer. Like there's a
Mhm.
plethora of different people in our nation. And so, what a great way to release this on Labor Day weekend, where you
Yes.
will now have the opportunity, not only as a professional in the industry of real estate, to offer this as an opportunity for your clients to now have a way out, especially for those that are like, I don't even know if I really want anyone looking at my credit. I mean, I get it. I know I got to do some things. I know we got to tighten it up. Okay, credit fitness, but
Mhm.
I'm embarrassed. I'm a lawyer. Okay, I'm like up for partner. Like stuff like that. And I'm only repeating what I hear my clients say. But the thing
Right.
is that this was something that we've birthed because we knew that this was an ongoing issue of so many people who do have high profile careers and they just need a safe haven. So this is where you're going to be able to have a safe haven to work on your own profiles. If you are the real estate agent, the mortgage broker, the corporate banker, trust me, I get it. I get it. But
Mhm.
this is the way to be able to do it. And you'll be able to not have to know how to do credit repair, how to write a letter. How, matter of fact, you don't even have to celebrate. There's a specific company out there. It's a multi-level company. I'm sure you know of it. They all celebrate about, putting out their letters. Hey, these are my letters. I listen. I don't know if I had issues. I ain't telling nobody I'm sending out no letters. I want nobody know I got a letter and I'm driving a high end car. You crazy? I'm walking around with a Gucci bag with no money in it. Let me just play that off and let me get my life, okay? But this is the
Get
way
the
you don't
money.
have to do that. Yeah, right. You don't have to do that. All you need to do is know how to log into Credit Karma. If you know how to log into Credit Karma, you will be able to go through this with flying colors because all you have to do is just log into your credit monitor. It won't be Karma. We have a better one than that,
Mhm.
but it's an opportunity for you to log in. You
Mhm.
click, point, and upload. Just push the. It's all push button, point and click, push button. I think it's maybe
Okay.
3 steps. So you log
Mhm.
into, you have your logins for your actual credit monitor to put into the system. And then,
Mhm.
of course, we have these smartphones. Well, we have smart intelligence. Artificial intelligence is going to extract all the weird stuff out of your report. It will detect what needs to be like written or have a dispute written on, and it creates the letter for you. You don't even have to know the reason. Everyone always usually talks about doing repair and saying this account ain't mine. I said it just like that.
Mhm.
This account ain't mine. Listen, that's a
Mhm.
lie. Most of y'all are lying about stuff. Listen, it's a numbers game. I get it. But the computer software that you'll have access to will be able to extract the actual negative information as well as some
Mhm.
indiscrepancies because there's sometimes like names and like all that stuff is weird. So the computer software is actually smart enough to know what needs to come out, what needs to be talked about, and it makes the letter for you. You're done. It creates the reason. You're done. Push the button for
Mhm.
print. If you got a printer, great. You can do it right from your cell phone, iPad, whatever. It doesn't matter if you have MacBooks or Chromebook. You'll be able to do it in seconds. And so that is what we're going to be able to give you. You can do it in the discretion of wherever you are. And like Planet Fitness, they have the black card, you can bring a friend. Well, now you'll
Yeah.
be able to not only help yourself, but it'll be a you plus two situation where you can help two additional profiles that is either a family member or friend. You guys want to be partners or business partners. This is an opportunity for you guys to work together and be able to do it discreetly. And if you're like, well, that's nice, and how that work again? If you're that person that says, I need accountability, I need to talk to you, Almitra. I need to ask some questions. I need to know the whole in and in because I'm trying to get this property. You know how to do it. I'm trying to get this out. Listen, if you are that person that needs the most aggressive and you don't really care about the whole I want to be in the closet type thing, nothing wrong with being in the closet. You can do it in the dark. I wouldn't care. The fact is, you'll be able to get a 10-week intensive with myself. It'll be a Tuesday, a live training Tuesday, where not only will you see me on 12 noon of that day, Eastern Standard, but then you'll have that intensive class at 8 p.m., same day, Eastern Standard. And if you're like, that sounds nice, I'm going to miss that, we'll give you the replay for 90 days after the class. So it's really something
Okay.
that we're going to help you be more accountable for. You're going to have assignments on your specific situation. So if you know, I need to build, I need to add, I need to increase, I need to decrease, like there's a bunch of different reasons why your scores are the way they are. We'll be able to visit why those reasons can actually be reverted or improved of, getting to the goal that you're trying to get to. So it's going to be released tonight. We're celebrating on my
Woo!
Facebook page. So hopefully for those that are
Mhm.
actually on Facebook, they will be watching. I'm also going to be giving some cash to somebody's cash app. I think it's on the 15th of September. We're trying to
Okay.
really give you guys an opportunity to know that you can do this. Okay.
Yeah.
Knowing what your issue is half the battle. And that's why we wanted
Mhm.
to provide software for you to see, hey, I really don't have to know too much about nothing. Okay. All I need to know is, can I get the systems? And we should be able to see that it's about systems. It's not about how smart you are by how we can look at the administration in the White House. We know that there are systems in place to make sure that the person who's in charge, whether you like him or not, whether you voted for him or not, he will never be able to really truly goof up the country because there are systems that makes everything keep going. So it doesn't matter if you feel like you're the smartest bumblebee on the planet or the dumbest dumb of the planet. The fact is if you have a system that works, it trumps what you know. It will help you increase your bottom line by just getting you out of the way, allowing the artificial intelligence to do what it does, and then you can combine that with being in a virtual room with myself and my team to be able to say, okay, this is your bottom line, this is your goal, and this is how you can get there. So we're looking to celebrate with everyone who can actually meet those milestones. We're looking to see a bunch of people get first-time home mortgages as well as refi. This is a great time to refi.
It's a great time to reply. Yes.
Yeah. And then we're
So how do
also going,
people?
yeah,
Oh, go ahead.
I was
I
going to
was
say,
going to
so
say
if
how
they're
do people?
looking, yeah, so
Mhm.
I was going to say, if they're looking to do that, I hope they will follow me on my Facebook page, which is
Which is
TGTC
T.
underscore unplugged. And that's just short for This Gal Talks Credit underscore unplugged. And also make sure
That's
they
Facebook.
follow, yes.
Okay.
And then also make sure they go to the website at creditfitness.co and join the Credit Fitness Club. It's free. And that way they'll always be on the up and up to know what we're doing. Okay. And we're going to go in, like, for instance, I'm going to talk about for all those folks that did deferment. Now, I'm not going to be Debbie
But wait,
Downer
let me
here.
back up.
Yes.
Creditfitness.co.
Yes.
No M. No M.
No
Just
M.
CO.
No M.
Okay.
.co.
Okay. Creditfitness.co. Okay, gotcha. All right. And is there a number
CO.
that they?
CO. .co.
Uh-huh,
Okay.
got it. Uh-huh. And is there a number or email, or if people want to
Yep.
contact you directly? What is
Yep.
that?
So if you're here local, you can do 215-645-7053. That's the office number. But
Okay.
for those that are like watching now, I'm going to give you
Mhm.
my number and y'all can
Ooh,
text. Yeah. I want you to
okay.
text to 215-6. I'm sorry, I'm going to say the office number again. 215-778
Uh-huh.
1110. Now that's
Okay.
my mobile desk number for Credit
Okay.
Fitness. I want you
Okay.
to only call if you know you are ready. Okay. If you are
Okay.
that person that's like, that's not even really good energy to begin with. We do a lot over here. So I would rather you do behind the screen and just watch your Facebook or something. But if you're wanting to know, hey, what are the steps? What do I gotta do? Then make the call. Okay, because there's so much that you can really do in the next 90 days, more than
Mhm.
what you think you know. All right. And let
Mhm.
me just say this too, Clara, because we touched on it earlier about payment history. Anyone that
Mhm.
has actually done any deferments on their mortgage payments and or
Mhm.
their credit card
Important.
payments, yeah.
Mhm.
Unfortunately, that you might find yourself in more of a delay in going forward with purchasing a home or doing a refinance because there's a code that's been placed against your account, which now may really put you in a position where you may have to cool off for about 12 calendar months. Okay.
Wow.
They did not disclose that in the beginning. And it's usually because you
Mhm.
didn't ask the question, you didn't know to ask. Okay. And then also, too, if you put in your credit cards for like a workout, I think that's what we'll
Mhm.
call it. Okay. It's a better term for
Uh-huh.
that. But depending on what you're doing with that credit card, it's a possibility they can shut it off. Okay.
Mhm.
And you might not even have had like, I know some people that I have as clients, they know to carry their jet load on their business credit cards. And so the
Mhm.
business credit cards, depending on if they made a oops They pay
Yeah.
late, they can lose their 0% interest or whatever those low interest rates were, and it could shoot right to 29.99%. So one
Mhm.
particular company, which I won't mention, actually does this. They have awesome products. In fact, this one particular
Mhm.
client that I have, it has four of these cards. One on business is a $50,000 line. They maxed it out because they wound up taking all the debt load off of the personal and putting it back onto the business side, because that's why they had the debt to begin with. They were basically buying property and they were using their
Mhm.
personal lines to do it, which is fine. But once they established their business, they were able to move the debt load from the personal over to the business. So by doing so, COVID hit right at the time that they were supposed to go to settlement. Of course, a lot of hard money dried up and a
Mhm.
lot of people fell through the cracks. Their deals fell through the cracks. So, with that being said, the rate shot to the roof through 29.99% on 50 grand.
Mhm.
So you can imagine what that
Gotcha.
looks like, right? That was an ouch.
Mm.
Now,
Yeah.
their personal credit was actually pretty decent because it's zero balance. They weren't really carrying much of anything and never paid late ever.
Mhm.
So they called and said, "Hey, this card is killing me. Okay, I need to know, how do I fix this rate?" So we went and called, and of course, they're like, "Hi." They were so cheery. "Hi, we're more than happy to help you. What we could do is reduce that 29.99% down to 14%." And of course, my client's like, "Yes." I'm like, "Hold it." I said, "Okay. And what would be the contingencies? What are the consequences, or what are the what are we going to lose in this?" She says, "Yeah. So I see that you have the three personal cards, and the only thing is, although you don't have a zero balance, I mean, although you don't have any balances on there, and you've never paid late, we'll have to close all three."
Oh, so they lost their history. Oh my God.
So as soon as
Oh,
they were like, "Yeah," here's my uh, okay. And they're looking
yeah.
at me like, "What do I do?" I'm like, "Hold on." I said, "Okay, so if we are going to let this card come into this 14%, what else happens? Oh, we'll have to reduce the limit. So every time you pay down the card, we'll just keep putting the limit lower and lower right at where your balance is." Okay. But you can always go back and ask for, your limits back once the situation gets better. I said, "Okay, what about the personal cards? How does that work?" "Yeah, we'll have to do another hard inquiry to see if you could qualify for another card later." Now, I've
Wow.
already told you that payment history is important.
It's
So this
important. Yeah.
person's cards were more than 5 years old, and it was about
Mhm.
70,000 in total for all three
Yeah.
on the personal. So now
Yeah.
he's going to lose $70,000 worth of available credit, which really
Right.
helped the scores be as high as they were. They're going to
Right.
now lose the opportunity of even having access to the credit because they're going to take them away. So I'm just saying all
Mhm.
that. I had to drop that because I know so many people are like, "Oh my God, I did a deferment. Does that count? Does that mean I'm going to be an issue moving forward?" Yes and no. It will be an issue if you don't do anything about it or have a game plan to stop that severage,
Mhm.
but it won't be a problem if you do something to like be proactive.
Wow. Well, I'm really, really excited about
Yeah.
the tell me again what it's called. The American
Credit Fitness America.
Credit Fitness America,
Credit
which you have
Fitness
coming up.
America.
Yeah,
Yes,
Credit Fitness
yes,
America. So reach out to Miss Almitra to get started with that. It's starting next week. Um,
yes.
you know, keep in
Well, we're doing
mind
an
for your
early bird.
credit.
We're doing an early bird registration because we knew that we were going to be doing a lot of marketing online on different platforms and stuff like that. So we wanted to give
Mhm.
you guys an incentive to be first ahead of the line. It's going to be a very intimate group setting. We do have some community rules. You won't be allowed to plug your company and all that because people are not there for that. They want to know, how do I get my credit profiles as tight as it can, and how do I do this in the shortest amount of time, like 90 to 120 days. Like, this is a no nonsense platform. We really want to keep people motivated, and we want to celebrate them as they are meeting milestones. I had a guy in my office yesterday, and he was able to add two $5,000 lines of credit to his personal profile to build his
Nice.
profile. And he's looking at me like, really? Is that easy? Why didn't
Yeah.
that come through sooner? So
Yeah.
we want to focus on doing stuff like that.
Awesome. Credit Fitness America. Reach out to Miss Almitra. Put all of her contact information in the chat. So that girl talks credit, Miss Almitra
I'm gonna
Tankersly.
get you with this girl. I ain't no girl, I'm gal. Let me tell you the story about gal. So
Oh, wait, wait,
my
wait,
family
wait.
is in South Carolina and they're like, gal?
Oh,
That's how that came about.
okay. Let me correct it. Correction. That
Yes.
gal talks
Correction.
credit.
Correction.
I
I'm all
stand for
woman.
that's right. That's right.
Yes, yes. No, but I'm excited for your crew. And again, if they are a mortgage broker or a real estate agent, they're like, I need help. I got like 50 files that I can't do anything with. Put them back in the pipeline. Let's turn them back around. Some of them are actually like 60 days away to settlement. I promise you,
Yeah.
especially if they have the money and you want to make sure you can keep them in the loop, especially if they have the money, because they're going to take that money and do something else with it because they're discouraged. So if you can keep them
Indeed.
focused instead of just saying, oh, not right now, tell them 60, 90, 120 days. We're going to do this.
Yeah,
Okay.
no, 90
Especially,
days should 90 days should do it max.
yeah,
If they're serious about what they're doing and if they're,
yeah,
working with you or, someone who knows about what's going on with credit,
exactly,
they should be able to do
exactly,
it in 90 days and get
exactly.
it done and keep it moving. What
Yes,
can be done. So I
yes. And
just
you know
want to
what, too,
thank
Clara,
you.
before you end that, the
Uh,
collections, don't get hung up on collections because some people are like, oh, I got to get everything off my credit. Stop. I had
no.
someone who had a $10,000 charge off with Wells Fargo. It was a vehicle.
Mhm.
Navy Federal was able to still approve them for their home mortgage. So I just need you
Awesome.
to know that there are certain things that we can do to work around that. So I use that as an example because some of y'all just got $5 collections. So
Right.
let's get in the room.
Okay. Um, So we're going to end the show, but this has been a wealth of information. I just want to thank you. I know you could go on and on and on all day
I
because
can.
credit fitness is like, you got to get on the track. You got to get on the track, because
Yeah,
credit fitness is very, very important for you being able to leverage your
yeah,
wealth in the future. It's very, very important. So start today. Don't be embarrassed. Don't be shamed.
yeah,
Reach out. You can participate in the program anonymously if you need to do that, or you could be all in and say, this is me. This is what I want to do. But definitely start today, whether you're 500, 600, 700, you can always improve and not only improve, but you want to keep it consistent,
yeah.
over the long run. So definitely reach out to her. I just want to thank you again. And I have that in my mind now, 35, 30, 15, 10, 10.
Yeah.
And so when it comes out with the jingle,
I
I
know.
want to be a on there
Right,
somewhere. And
right.
our guests are really here. They're here for as a resource to you. So go back,
Yeah,
replay this one. You can go back to the other um, broadcast that Ms. Tankersley did as well on credit to get more information as well. Definitely follow up with her about the Credit Fitness America that's coming up. So I just want to thank
yes.
everyone, yay, who tuned in today, whether you're watching live or if you're watching this later on the replay. Remember to like, share, and subscribe. If you have any questions, you can post them after the fact. We'll definitely get back to you on that. You can reach out to Ms. Tankersley, or you can reach out to me at Lyonsview Realty, info@lyonsviewrealty.com. I just want to thank you for watching today. Financial
So thank
Fridays is here as a resource to you. We're here to provide resources, information, tips, and trends that impact your bottom line. So I hope that you receive something of value today. We're sending love, light, and prayers out to anyone who has lost a loved one. If you have someone who's in the hospital for any reason, because people still cannot get in to see or be with their loved ones while they're
yeah.
in the hospital. If you are experiencing the impact of physical distancing, sometimes we forget, but we are still in a pandemic. And definitely shout out to our essential employees, those who are going to work and providing those needed services, our food people, our healthcare, transportation, food, police, fire protection, and definitely our leadership. I just want to encourage everyone to take care of yourself, take care of your family, and stay safe. My name is Clara Lyons-DeVaughn. This is Financial Fridays, and we stream live every Friday at 9:30 Eastern Standard Time on Facebook and YouTube. So you can join us next Friday at 9:30. Until then, be safe and keep living your best life. Thank you so much, Miss Tankersley. Love
Yeah.
you, and stay fit, stay credit fit.